This is Jody Trannon with Chapter 2, Part 3 for Principles of Accounting. Before we get into the content of today's PowerPoint, I wanted to introduce two things to you. The first is compound journal entries. Here's a transaction that occurred on November 15. Smart Touch Learning paid cash expenses of $2,000 for office rent and employee salaries of $1,200. You could do two separate journal entries for this, or you could combine them into one journal entry. If you're doing one journal entry, you need to think about the three accounts that are being affected. Those three accounts are office rent, employee salaries, and cash. Think just for a moment what that journal entry would look like for this transaction. In a compound journal entry, we only use the accounts one time. So in this case, since cash has been hit twice, once for office rent and once for salaries, we add those two amounts together to show one credit to cash. The other thing I wanted to show you is a 4-column account ledger. You notice here on the left we have a T account, and we have used T accounts before. We're going to start using the 4-column account ledger, and you can see that there's a T account right in the middle of this ledger. The main difference is that the ledger provides an opportunity for a running balance. So each time we have a transaction, we also calculate the balance, and we can see what our balance is in cash as our transactions progress. You'll notice that both the T account and the 4-column account ledger end with the same balance of $12,200. Here's another way of looking at the journaling and posting process. Step 1, we want to identify the accounts and the account type. Are we talking about assets? Then we know that the normal balance is on the debit side. Or are we talking about liabilities and equity? Liabilities are credit balances, and many of the accounts in equity are credit balances, although our withdrawals account and our expenses account are both debit normal balances. Step 2, we need to decide whether each account that's being affected, and we always have two accounts affected, at least two, we need to know whether each account is increasing or decreasing. So we need to understand if it's a normal balance of a debit, we're going to be debiting that account in order to increase it. Step 3, we need to record the transactions in the journal. That means writing a journal entry, which we'll talk about shortly. Step 4, we post that journal entry to the ledger. And then step 5, we need to determine whether the accounting equation is still in balance. To this information today, we want to add posting references. Posting references will help us to know where the information came from, and it makes it easier to track down answers when we have questions. So in step 4, when we post our journal entries to the ledgers, we're also going to use posting references. Remember that in our posting process, we are trying to post our journal entries and that activity into the actual accounts. So here we have a journal entry and our posting references. This indicates that we have already posted the $3,000 debit to prepaid rent and the $3,000 credit to our cash account. These numbers here are the account numbers associated with these accounts. Our cash account has the account number of 110, and our prepaid rent has the account number of 180. Let's look at it all together. Our posting process takes journal entry amounts and transfers them to the actual accounts. The journal entries are written in a book called the General Journal. All of our account ledgers are in a book called the General Ledger. We need to transfer our amounts from the General Journal into each individual account in the General Ledger. Here you can see that our cash account is account number 101, and we have debited it $30,000 in our General Journal. You can also see that that amount was added to our cash ledger in our General Ledger below. On November 1, we have a posting reference of J1. That means Journal Page 1. We have a debit balance of $30,000 with a running balance of $30,000. You'll notice that the account number 101 was transferred to the General Journal once that posting was complete. The second entry that we need to do is to take Bright Capital and the credit amount and transfer that into our General Ledger for Bright Capital. That $30,000 credit is transferred to our Bright Capital account of 301, that's our account number. We post the reference in our General Ledger Bright Capital account of J1, that is our journal page number 1, and we show that we have posted it by writing 301, which is our account number, back in the General Journal. That way, when we look both at the General Journal and the General Ledger, we can tell that it's cross-referenced and that we have posted it. When we have posted all of our journal entries into all of our General Ledger accounts, and we have calculated new balances in our General Ledger accounts, those balances need to be transferred to a trial balance to see if our books are still in balance. Here you'll notice a trial balance that we have seen before. We have debits on the left and credits on the right. Each one of these columns need to balance. Sometimes we don't balance, and I'll give you a few tips on what to do if your trial balance does not balance. If your trial balance does not balance, it likely has one of these 3 problems. First, we'll start on the top right, missing accounts. Sometimes we just forget to transfer a balance from our General Ledger accounts into our trial balance. We may just have missed an account. Compare your trial balance back to your ledger and make sure that all of your accounts are included. Second, did you accidentally record a debit as a credit or vice versa? You can figure this out by taking the out of balance portion between your debits and your credits and see if it is divisible by the number 2. If it is, then you may have recorded a debit as a credit or a credit as a debit. Look back at your General Ledger accounts and make sure that each account's balance is in its normal debit or normal credit side. Then make sure that you've transferred those balances over correctly to your trial balance. And finally, sometimes we transpose. That means posting $76 instead of $67. We've put our numbers out of order. You can figure out if this was your error by taking the out of balance amount and seeing if it's divisible by 9. If you can divide your difference by 9, you may have transposed a number. Go back and check your General Ledger numbers and check what you transferred over to your trial balance and make sure there were no transposition errors.